How do loan officers make money? 3 ways: flat fee, basis points, or salary. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to inform you on what's a mortgage. If it's your first time tuning in, do me a huge favor. Hit the subscribe and notification button so you're notified every time we go live or post new content. We go live every Monday night at 9 p.m. and we post content daily on Facebook and Instagram. Also, this is an interactive channel, so ask a lot of questions and leave a comment. In today's video, we're gonna talk about loan officers' compensation. Like I said, there's 3 ways loan officers or loan consultants get paid: flat fees, basis points, AKA BIPs, or salary. First, let's talk about flat fee loan officers. Basically, they are paid a flat fee per unit, AKA per loan. And sometimes these units are based on a tier system. For example, a loan officer can make $400 to $500 per unit. So if they close 5 units a month, they can make up to $2,500. But if they fund 10 units or more, they can move up to the next tier and increase it to $600 to $800 a unit. But sometimes they'll pay by basis points. It all depends on where and what company they work for. Flat fee loan officers are very popular among call centers. But most call centers will decide how they pay their loan officers after they factor in cost per lead and cost per loan. Now, let's talk about loan officers who get paid by basis points, AKA BIPs. Basis points is the most popular way loan officers and mortgage brokers get paid. Here's a general breakdown on basis points. 200 basis points is 2%. 100 basis points is 1%. 50 basis points is 0.5%. For example, if a loan officer closes a loan at $400,000 and they make 200 basis points, which is 2%, they make $8,000. If they make 100 basis points, which is 1%, they make $4,000. And if they make 50 basis points, which is 0.5%, they make $2,000. These loan officers generally generate their own book of business. They call them self-gen. There are occasions when self-gen loan officers are given leads. And on those leads, they get paid a little bit less on basis points. A loan officer who generates his own book of business can make between 100 to 250 basis points, and even some make up to 300 basis points. Loan officers who work at brick and mortar banks like Chase, Wells Fargo, Bank of America, or local credit unions can make around 50 basis points. Usually a self-gen loan officer will work on a team or region that has a set compensation plan of 1% or more. But if that loan officer wants to make more than their teammates, the company would have to increase that loan officer's rate sheet to compensate them. For example, if James joined Adam's team and Adam's team makes 1%, but James wants to make 2%, they would have to make a custom rate sheet for James to compensate James on his 2%. That's why some loan officers will have different rates even when they're on the same team and same company. Now that we understand how loan officers get paid BIPs, let's talk about mortgage brokers. Mortgage brokers broker their loans to different wholesalers like Quicken, United Wholesale, Fairway, or HomePoint. They have different compensation plans for each wholesaler they work with. It can range from 1% to 2.75%, even 3% of the loan amount. So when they tell you they're gonna shop for the best deal, what they really mean is what lender is paying what compensation at what rate for the day. And that's how mortgage brokers get compensated. Last but not least, salary loan officers. Typically, salary loan officers will make between $4,000 to $7,000 a month. No matter what loan they sell or how many loans they sell, they get paid a salary. There's no such thing as a free meal. If a loan officer makes $7,000 a month as a salary, they are the top of the line, grade A loan officer, and are expected to fund at least 25 units a month. Typically, you'll find these loan officers working as loan assistants for big-time loan officers, credit unions, or banks. Or, for example, a RedDoor.com or Better.com, where loan officers are more customer service representatives and not salespeople. And that's how loan officers make money. If you find this video useful, do me a huge favor. Like, share, and save this video. And if you still feel lost and you have questions, leave a comment below. We want to end all our episodes with, our attitude is gratitude. Without you, there would be no us. And don't forget to subscribe. All right, cool. It took us 45 minutes. 47?